everybody, it's Joey Rockenstein. In this video, it is Ask the Expert time. That's right, I'm talking to a mortgage consultant, and we are talking about the different types of home loans that are available for you, the home buyers. That's what I do, looking out for you. So stick around, grab a notebook. You're going to want to sit down too, because this video is a lot of information. So much information. Before I sit, subscribe, thumbs up, like, go. What's up, everybody? It's Joey Rockenstein. This is Rockin' Real Estate LA, the channel that helps out first-time home buyers or anytime home buyers achieve their real estate goals with results that rock. On the show with me today, I have a leading expert in money, which is what we need to buy those houses. Ladies and gentlemen, please welcome to the show, Natalia Benshaw from Prosperity Home Mortgage.
Hey, Joey, thanks for having me here.
Thanks for being on the show with me. I appreciate this. I call you the expert because this is what you do. Like, you were doing this all the time. You were even like scrambling to get some stuff done before we even started shooting today. So thank you. I appreciate you taking the time. But this is information that people need to know.
My pleasure. And I have a lot of great information to share. I've been in the mortgage business now for 19 years. Wow. And I hope I can give you guys some great tools, because I think everybody should be a homeowner. Never a bad time to buy.
It is a great time to buy. And that's one of the reasons why I wanted to have someone else besides myself saying that in these videos, because I think people really need to hear that now is a great time to buy, especially with incentives like the extremely low mortgage rates and things like that. So I think we should just kick it off by explaining to everybody, first of all, like the different types of loans that are out there for first-time home buyers.
Sure. Yeah. Well, lots of great options actually when it comes to first-time home buyers that are applicable all across the country. So I get the question a lot, like, hey, is there any special programs? And really, you know, FHA is your first and foremost go-to nationwide when you are looking for that quote-unquote first-time home buyer program.
Right.
And FHA stands for the Federal Housing Administration, and that is a government-backed entity that makes those loans available to the public. And what an FHA loan offers is a down payment as little as 3%. So definitely a great option if you don't have a ton of money saved, but you want to get in the game. FHA loans generally come with very low interest rates. However, the one caveat with them is that you have what's called mortgage insurance. And that's basically an insurance policy insuring, I guess, FHA in this case, who's the lender, that, you know, should you default on the mortgage, that they will be made whole on your loan. So it's similar to like an insurance premium on your car, or anything else of value, and you make that as part of your monthly payment. Now, that insurance premium is on there for the life of the loan. So that is one thing to consider. Sometimes if you can put down a little bit more money, you know, it will definitely reduce that for you, but still a great way to get into your first property. And eventually you could always refinance out of that FHA loan too, once you have equity and your home is appreciated, and you know, go into some more traditional financing. Great way to get in the game though.
Wow, so much great information already. So my questions are, you talked about a down payment. You were saying with FHA it's 3%. Maybe can you talk about a little bit how like a down payment works? Because I know people think that they need to save up, you know, a certain amount to be able to buy a house. What exactly do you think is a reasonable amount of money to save up for a house, and like how does the down payment work?
Well, it's all going to be, you know, tie back to what your comfort level is with your monthly payment. So there's not really a set dollar amount, but depending on where you live and what the home prices are in your area is really going to determine what you do need to save. So for the sake of using round numbers and to answer the question, let's say you buy a home for $100,000. That's the contract sales price that you agree upon with the seller.
Right.
If you're looking at a 3% down payment, that would only be $3,000. However, you do need to remember that no matter what kind of loan you take to acquire the property, whether it is an FHA or VA or conventional, which we're also going to talk about, that you have money for what's called closing costs, because there are a lot of parties, as you know, involved in the transaction to make that deal happen, such as an escrow company or a closing attorney, depending on what state you're in. There's also the title insurance company. So the lender, everybody's going to charge for their services. So I say a good rule of thumb is to have, an extra 2% or 3% of whatever your purchase price is saved for that, in addition to the down payment, because the down payment is not the only cost associated. I'd say a good number in our example to have saved would be probably $6,000-7,000 to be conservative. You obviously always want to save a little money in reserve too for a rainy day,
Right.
so that you can always make sure you can make that mortgage payment. So I always say it's good to have at least 3 to 6 months as well of whatever that mortgage payment's going to be, inclusive of your property taxes and your homeowner's insurance and everything, just set aside.
Great. And are there certain programs that people can apply for, like as far as incentives for loans or anything like that?
That's really going to vary county by county.
Okay.
I definitely would say check with your county and see what kind of maybe local bond programs or down payment assistance programs or stuff through the city are available. We certainly see all sorts of programs throughout the country that can help you also get that initial 3%
Great.
down.
And then the different types of loans that are available to home buyers. Like what are the most common ones that you're seeing, or the ones that you do the most? Or
Sure. Well, I'd say when you can go through the conventional route, meaning that the loan is most likely, backed by Fannie Mae or Freddie Mac, which are government sponsored, not government owned like FHA, you can get a little better as far as the terms go on that mortgage insurance. Like I mentioned with the FHA, it's on there for the full 30 years.
okay.
If you go conventional, those investors offer a 3.5% down payment option. So that's great. And it's only 0.5% more if you can do it. And then once you've paid on that loan, so back to my example, let's say you initially borrow $96,500 on a conventional loan on a $100,000 purchase price. You put your 3.5% down in our example. Once your loan is paid down to $80,000, or excuse me, 80%, well, yeah, the $80,000, pardon me, my math, I'm doing this without a calculator, it's round numbers, it should be easy. You've achieved that 20% equity position in the property, so the loan balance is $80,000. Your mortgage insurance then comes off the loan, and your payment goes down. So that can be, $100 a month. And, it's nice to have that go down and not be paying that extra insurance premium on the loan for, God knows how many more years.
Absolutely. So, that's a huge savings and something that you would want to get off the loan.
Yeah. So if you could just do that 0.5% more, I actually recommend going with conventional financing. And that's what we do the most of these days. Right now, the way interest rates are being, for the most part, on like a A+ credit profile and full income documentation client, we're seeing them below 3%. It doesn't make sense to really anything other than a 30-year fix. There's no need to take any sort of a risky term that may balloon or that's only fixed for like maybe 5 years or 7 years. I'm not seeing any of that pencil out right now when rates are so low.
Interesting. And speaking of the rates, like just a little side note, are you pretty amazed at how low the rates are right now? Or did you kind of like see this, happening, or what are your thoughts on that?
Never in my life and all the years that I've been in this business have I ever seen rates this low.
Wow.
It's an incredible moment in history. minus COVID, but I guess we have COVID to thank for that. The silver lining, you have more affordability right now when going to buy a home, and you are locked into that rate for 30 years. So I don't know that you'll ever find money this cheap again. So.
True. And that's, you brought up another interesting point, because I feel that I have some clients who are maybe on the fence or are worried about buying right now because they're, thinking that the market's going to tank because of COVID, and things like that. What do you say to your clients to kind of give them a little bit more assurance that, that the market is holding strong, that it is a good time to buy right now? Like, what do you really tell people?
Well, as an active investor myself and a homeowner, the way I see it is that you only lose money if you sell in a down market. So nobody's forcing you to sell if the market dips. I mean, right now everything's going strong. We don't see rates really going anywhere for a while. And even if they did creep back up a little bit, it's going to be a gradual move from what our, assumptions are. And I always say have a plan B when you go into a property. Look at what that home that you're buying now to live in may rent for too. Haven't, yeah.
Good idea.
Mortgage payment. If you lose a job or something, can you move out and rent it out so that you don't lose the asset? Because, I mean, that's a great plan B. And you just know your numbers going into the deal. If you think about it big picture too, you go into a 30-year loan, and let's say the market does dip, I don't know, just in the worst case scenario, it always will come back up from what we've seen time and time again throughout history.
Yes.
And in 30 years or less, you have something that is completely paid off. Even if you don't want to go live in that $100,000 home, let's say it rents for $1,000 a month. Well, I don't know about you, Joey, but in 30 years, when I'm in my retirement, I wouldn't mind having an extra $1,000 a month, and it's the gift that'll keep on giving.
That's true. That's so true right there. Yeah. You want that passive income.
That's how you achieve passive income. That's what every, wealth guru talks about. Well, there you go. There you have it.
Right.
You don't have to sell in a down market. You only lose money if you choose to do that. So right now, though, I think you're still going to see plenty of appreciation for a while. So I wouldn't even
absolutely
think like that.
And there are some other loan options as well. No, I kind of got off topic a little bit, but I think those things are important.
Yeah.
I know there's VA loan. You were telling me about the doctor loan, conventional loan. Do you see a lot of those as well? What do people need to, what do you think of those loans in general?
VA actually made a big change at the beginning of the year for the better, and it's actually been a hot product. Obviously, it's only for active or retired, military.
Right.
But with that said, they can come in with 100% financing, meaning no down payment, and they have some looser qualification requirements as far as maybe credit goes or income is concerned, which we're going to dive into some more of those, definitions and details as to what else a lender would look at when considering an application.
Right.
So yeah, some looser qualifications on some other touch points. And with the doctor loans too, when you have the jumbo clients, it is a pretty available product nationwide still, even with COVID and all of that happening, and lenders being a little more conservative in general, but they can do as little as 10% down if you're a medical professional or in some sort of medical science or research end of that business, and you can get into jumbo loan territory, which, by the way, the jumbo loan limit's going to always vary county by county across the country. So you always want to look up what is the jumbo loan limit for LA County, for Ventura County, whatever county you're in. And that's what makes you either jumbo or conforming. But they can do as little as 10% down, almost to about $2 million on those loans. The caveat is they just need to be less than 10 years out of residency. And obviously the income needs to qualify, and credit and all the other touch
Right.
points that we look at.
Awesome. Yeah, because that doctor one's great, because I didn't know about that, and I heard about it from a doctor. So
yeah, it is great. Depending on who the lender is specifically on that, sometimes they'll even not consider their student loan payments to help them qualify. And every bank that does offer them has their certain little caveats to them, but it is a great product. And out here in LA, we're doing a ton of them.
yeah, a lot of LA doctors.
Yes.
Awesome. Any other information about any of the loans or programs that you'd want to add to this?
I always say just, do what you feel most comfortable with, and don't, stretch yourself too thin when buying a home. 30-year fixed, I really think right now is the way to go. I don't really see much reason to do anything too creative when rates are this low, but I'd say home ownership with a lot of the products out there is much more attainable than people think. And one thing I always tell my clients too is don't forget about all the tax benefits that you're going to get once you have that mortgage. Obviously, you and I aren't tax professionals, but anybody can probably Google it and figure out that, yeah, you might be taking home a little bit more money once you have that nice mortgage deduction.
Absolutely. And that's such great advice. And I love how you said too, like, do what you're comfortable with, because I feel like I say that to my clients a lot. And people really need to understand that, like, you have to be comfortable with what's going on and with the process. So that's great advice.
Yeah. So.
Awesome. Well, thanks so much for being on the show. They can find you on YouTube under The Mortgage Mom. That's correct?
Yes. And I am licensed in California, so anybody who's watching in California, I'd be happy to speak with you further and see
We'll
how.
put all of your contact information in the description below. I'll put all those links for you.
Beautiful. And by the way, Joey, too, when you put that in the link, we have some great mortgage calculators and some great just mortgage 101 tips too on my personal website that's there. And you guys can also find Joey through my website.
Oh, awesome. Thank you. All right. Thanks, Natalia. I appreciate you being on the show. Guys, thanks for watching Rockin' Real Estate LA, results that rock.